A $10 plunge in oil prices in a matter of days has one of the country's largest industries on high alert.
It's tough. I think it's kind of an overreaction.
Oil is trading on the cheap over concerns for the global economy. Saturn Oil and Gas operates in Alberta and Saskatchewan. With prices down to nearly $60 a barrel, the company could slash spending and drilling.
If we see a sustained 60, you're going to see companies pull back on capital. Once they pull back on capital, that's less need for engineers and geologists.
Since the latest round of tariffs from the U.S., North American oil prices have fallen about 15%. The industry is largely exempt from any direct tariffs. Instead, the global trade war could lead to a slower economy, lower consumer spending, and thus less demand for crude.
The ones that got hit hardest by tariffs were largely China and across East Asia. That is also the area where we expect to have the largest contribution to global oil demand growth over the coming year and years. So that is inevitably going to have a damaging effect.
At the same time, some countries, including members of OPEC, are producing more oil. That too is driving prices down. As a result, the value of Canadian energy companies is sliding.
If you're an investor, you wonder about what you should do. Should you stay the course or should you make some changes? So there's a lot of moving parts here that's adding a lot of anxiety.
Tumbling prices could cost some provinces billions in expected revenue from taxes and royalties.
We have a worst case scenario budget. We knew that we were going to end up with a lot of volatility.
Ultimately,
for now, companies will keep a close watch on prices.
Hopefully that this trade war is short-lived. We're hoping that we start seeing trade deals come out.
Waiting before deciding when to cut back on drilling and by how much. Kyle Bax, CBC News, Calgary.